Amit Chadha joining us now. He's MD and CEO at L&T Technology Services. Mr. Chadha, a very good morning. And thank you so much for speaking to us. Great to have you on. Let's start. Your Q-on-Q top line growth is strong. What do you see as the key factors leading to it, and how predictable is this kind of growth over the midterm?
The top line growth that we've had about 4%, Q on Q in dollar terms is driven by sustainability segment firing for us, which we had said will continue to start going upward. We had a lot of work going on in plant engineering, and then industrial also has done well this quarter and should do well next quarter as well. So we're seeing that upward momentum. The interest rates coming down is helping that segment and will continue to help that segment. Second, what's happening is the aging workforce is a reality, and we are seeing a lot more automation work coming out on the shop floor and in products area as well as the plant area for this segment, and that is helping. And we, as being, shall I say, having those differentiated offerings, are able to make a mark and impact. So you will see sustainability continue to do well as you go forward next few quarters. Knock on wood, fairly comfortable. Tech is starting to spend again, Neeraj. So tech is spending other than most of the semcon. Let's just put it this way: most semcon customers are spending in AI, Gen AI, compute power chips, and we're getting a positive impact from that. Number two, we continue to see positive impact from hyperscalers as they continue to invest in newer technologies and devices. And a couple of wins we have had this quarter in that area, so there is a ramp up that's there. Comms and media is the one that's been a little static. We'll see how it does. We've got some differentiated offerings. We believe that we will take them along. In fact, there's some Gen AI offerings in comms and media that we believe will help us in terms of gaining more market share as we go forward in next quarter. Now, when it comes to medtech, continues to expand and continues to do well. In fact, it was flat for us for a very long time, if you remember, but I'm happy to share it's grown this quarter. We're seeing positive momentum next quarter onwards, given trends of Quora and digital health. Now, and the differentiated offerings again that we've got. Finally, let's come to mobility. Mobility OEMs continue to spend. It's the tier ones that seem to be pausing spends, etc. Now, the key is that there's a number of consolidation deals that are playing out right now. We've been on the positive side of some of these deals in the last quarter. We expect to be on the positive side of these deals in the next quarter as well. And that gives us the confidence that there could be seasonality effects in Q2, Q3 for mobility, but quarter four it will come back up and go on from there. I'm not saying that I've given up yet. I haven't. The quarter has just started. The second half has just started. A lot to be done.
Mr. Chadha, you mentioned technology is picking up, but when we see the numbers, it does show very low growth. Could you elaborate on what you mean when you say technology is picking up?
We're seeing new projects being signed. We are seeing new areas that they're giving out, farming out to people like us. Core contextual conversations happening, a lot more work coming. See, if you remember, sustainability didn't do well last quarter, and I told you I do see sustainability coming back. Yeah. Right? 3 quarters ago, mobility didn't do well, and I said mobility is going to come back in quarter one. So we've got some of that forward indicators in terms of backlog, etc. that we carry, and it gives us the confidence that this is back and this is where it'll go. Plus, the investments that we have made are starting to pay off.
What's happening in mobility? All companies were saying that car companies are on a multi-year run to digitize, and therefore the spends won't stop. Has that reversed? Why is this space looking patchy?
See, there's two parts to it, right? Number one is that there are spends that are happening for future model years 27, 28 that continue to happen. Having said that, the adoption of hybridization as well as the EV is kind of in a limbo right now because there could be relaxation in terms of till when do the ICE engines have to be completely phased out. That could change, and if that change, you get a little longer to do it. So you don't need to spend all that money immediately. You could do it in a bit, right? Second, SDV spends are varied because different OEMs are in different phases along with their customers of how much or what to roll out. So one of them, like for example, driver assist, passenger assist is now vanilla, it's across, right? But Gen AI based driver experience apps that are coming up now and trying to actually make your car an entertainment center for the passengers is different by OEM, and it's different by what an OEM can sell into their consumers, right? So a lot of that varies, if you ask me. Plus, charging infrastructure still has to catch up. And then there's new technologies around hybrid. There are people talking about fuel extenders now. So instead of ICE with a hybrid, you have EV with a range extender, right? You
Mm-hmm.
flip it around. And that's a very different concept. So some of this will continue to happen. I would not be too worried because it's not like this is going to happen like, for about 2 years, there'll be a down cycle. I don't think so.
You've also mentioned in your release that you're seeing an uptick in AI-led deal conversions. Now, have you shown those deal wins plus empanelment agreements in sustainability? Talk to us about those. What is the quantum that you're seeing?
Gen AI is coming to age where people are actually using Gen AI to look at real life use cases and see how that will impact. That includes software defined lifecycle around code reviews and tests. That includes manufacturing shop floor in terms of recognizing material and bill of material. It goes to material testing and the likes, and then leveraging Gen AI and AI to predict as to what would happen, looking at chemical equations. So there's a lot more applicability and projects that we are seeing applicability of in this. So for all, at one point, all of us peer group companies used to say we do 65% in digital, 50% in digital, etc. And beyond a certain point, we actually stopped saying digital revenues because everything was digital. So
Digital.
Gen AI will reach that stage that they will have components of that in each and every program, and therefore it will become part of whatever you are dishing out, delivering to clients, and therefore or executing for clients, and it'll just become the norm. And some of those investments we've had to make in quarter one and quarter two to safeguard ourselves. In fact,
Mm.
our long-term ambition is now building $3 billion segments, mobility,
Yeah.
sustainability, tech. Medium-term outlook, $2 billion, 17 to 18% EBIT, and then current is 8 to 10% growth with 16% levels of EBIT margins. So the point I'm making is that this technology disruption that's happening is actually fueling some of this that ambition that we've got. So it's not without support of spend patterns that we're making this statement.
So,
Got
so,
it.
so you have shown deal wins plus 2 empanelment agreements in sustainability. Is that right?
Happening in sustainability is that a lot of our clients may not give us a big deal, but they'll say we are paneling you to work on the following refinery sites, or we are wanting you to work on plant engineering across all our refining sites or our upstream sites. So it's more enabling us to do it, and then we grow organically, like we had signed BP empanelment last year, if you remember. And we go on, then somebody said, give me a size of the deal. I can't give you a size of the deal because we are working together to define some of the areas we'll work in. So that's why I have confidence some of these empanelments have worked out. If you remember, we had signed a 100 million deal in plant engineering about 3 years ago, and somebody had asked me after the 100 million what will happen. Well, I'm happy to share that the client we signed that with is becoming one of our top 5 clients today.
Got it.
So a lot of this is organic growth that continues to happen.
Last question, sir. EBIT margins are lowest in the last 12 odd quarters. That's hurt the stock a bit this morning as well. What led to that?
So the guidance is that the EBIT margins will improve from here. There were one-time investments, there were one-time costs that we had in H1 that we had to take to be able to reboot the company and take it forward. If you remember, during COVID, we had done the same. So the COVID year was lower than this. So COVID happened, and after that, you saw improvement happening. We went up right up to 18.9%. Nothing in operating mechanism has changed. If you actually look at Q1 to Q2, the general gross margins have been flat. It's the SG&A that you see that is increased. So I have full confidence that as I move forward into quarter three, the margins will improve, and beyond that to quarter four.